Hello, everyone. My name is Michael Morales, Director of Business Development with LendSuite. Part of the things we like to do at LendSuite is we like to have very innovative companies come in and tell us a little about what they're doing in the short-term lending space. So we have little industry chats. And today we're excited, we're thrilled to have Jessica Thrasher from Payliance joining us to really discuss, transforming how lenders handle, debt repayments and different type of debit card and ACH transactions. So let's all welcome Jessica. Jessica, how are you doing today?
I'm doing great, Mike. Thank you. Thanks for having me.
No, we're excited to have you join in. Let's start with the big picture. A lot of my customers and lenders in the space, they rely heavily on ACH. Why should a lender consider debit cards over an ACH transaction?
It's a great question. So, from where I'm sitting, I feel like ACH is great. It's a tried and true way to collect your payments. But when you think about how payments have evolved over time and what your consumers and your borrowers expect, and not only how it can benefit you and your bottom line, when you think about ACH, it is a little slow. So there's a lot of value in debit card when you don't have to wait for returns. That's one value that just sticks out to the top of my head is, when you think about 3 days, 5 days, waiting to know if that money is good and in that account for you to even get paid. It's a long time in this day and age. So debit card is real time. That's a huge value. Not only is it real time to know that you're actually going to get those funds, but you have faster access to those funds. There's really no hold days with debit card. The only thing that can hold up you getting paid is if the bank's closed. So I know with Payliance, we settle your debit card proceeds to you the next banking day. So that money is there. It's in your account pretty much immediately. And there's also, of course, the borrower experience where you're really kind of meeting your customers on their terms. Debit card is becoming a more popular way to pay for most consumers, especially, kind of on the younger side, younger generations. They really do kind of have that connection to their debit card more than their routing and account number.
Let's dive in a little bit. So, it does cost more. There are benefits. I've heard people talk about how the blend rate comes down. What are some of the things that a lender or a customer could do to help kind of keep those costs in line?
So one thing that we really look at is the programs that are available to you from the card networks. A lot of lenders don't know that Visa, MasterCard, and Discover have actually identified lending as an emerging market for them. They want payment traffic from lending. So they actually have special cost programs. It's called interchange. I don't want to get way too deep in the weeds on payments because I can make your eyes glaze over. And then I think everybody will probably drop off of our chat here today. So without getting too deep into that, it's just what the processor pays. It's the rate the processor pays back to the card networks to move that money. And with those interchange discounts, they can be pretty substantial. So whether you are a large lender, then it's definitely a huge improvement to your bottom line. We're talking about reducing the interchange rate by 100 basis points, but also capping it. So you're taking that fixed and that variable element of your payment, that piece of your payment, and you're capping it. So that for any lender, large or especially small lenders, when you're trying to scale and you want to really control costs, then you're able to bring those costs down, those hard costs. And we pass those on to our lenders. So we don't keep those discounts for ourselves. We really do believe in transparency in your pricing. And those are the lenders' hard-earned discounts. The network set them up specifically for lending. It's not fair for us to keep them. So we pass on that savings. And it's definitely tied to a consumer loan product. So it can be a short-term installment loan. It can be a car loan, mortgage loan, credit card repayment. Really, it runs the gamut of loan products. So if it's the discounts are there for the lender, then why not take advantage of them? And I think that's just a little known fact when it comes to card processing and the costs that are associated.
Now, I remember, you bring up some good points there. And but I remember, did you guys come out with like some little calculator or something that helps people see like what they could, if they qualified for some of these programs?
We did, yes. So we have a couple options, really. If you want a more thorough analysis, we have a great team at Payliance who can really dig into the statements, the processing statements themselves, tear them apart, and do a line-by-line analysis and really show you this is what you would have paid had you taken advantage of these discounts. But we do have a self-service kind of a calculator where you can just plug your own information in. If you don't want to go through the process of really digging in with a rep at Payliance, that's fine. You can dig it on your own and see if it makes sense to even have a conversation with us first.
We covered a little price. Now, a lot of our customers acquire leads for their customer acquisition strategy. So in that, there's not debit card information that comes around. So a lot of lenders, and when I was on the other side of the fence, a lot of lenders and servicers are concerned about collecting debit card information because it adds an additional friction point. I mean, what are some of the things they can do to get, I guess, more debit card and to get and make sure that they're not slowing down their own process?
It's a great question. So I think one of the biggest things is think about how are you funding the loan today. If you aren't using real-time funding and pushing those funds to the debit card, then you could potentially be missing out on a large base of borrowers. It's a great way to grow a business. It's a huge competitive advantage for lenders. If I'm a borrower and if I can get my money from lender A in a minute, but lender B, it's going to be tomorrow or the day after, I'm going to go with lender A. And that comes with the debit card. So today it's real-time funding. It pushes the funds into the debit card directly into the checking account. It doesn't matter if the banks are open. You could do this on New Year's Day when banks are closed. That money is going to be available to your borrower in minutes, more than likely seconds. This week, Visa just announced that they're going to even lower the time. So right now, it has to be 30 minutes in the available balance. They're committing to under a minute, and that's going to be early 2025 when that is going to be the norm. So we're talking seconds. So in today's world where everything is real time and people want things now, you're funding your borrower in real time with the debit card. We offer the ability to tokenize that at the time of funding. So instead of passing around a full card number, nobody wants to do that. That's a huge security risk. Instead, from origination to servicing, just share a token. If someone was to be able to take that token or if that token is compromised, it's useless. So we offer that. You can share it across different, if it's a completely different entity, we can set it up to where that permission is there between the two. So that token can be shared. And that way there is no disruption. There is no friction. And then again, we're meeting your borrowers on their terms. That's how they're used to paying. Why not make that the way that they're used to getting funded as well?
No, I think you bring up a lot of good points. And I know there's a lot of conversations between our customers and their customers about the new rules coming out and how to make sure that, that they can get payments the proper way. So I think, using debit cards is something we're going to see a big increase in. And so that's why I'm really excited you were able to jump in, because I think debit cards are going to be a lot, as you mentioned earlier, you have information faster from debit cards. So very insightful. Any final thoughts you have for lenders? Anything that you want to add in?
Just that, we feel like debit card is a win-win. It's a win for the lender. It's a win for the borrower. Everything is going to move in real time. And, if you can make it a little more in line with your ACH costs today, then it's a huge win. Again, we're going to share the QR code that's going to take you directly to our calculator. We can plug in your information, see if you can save money. It's definitely worth if you can speed up faster funds, then why not save money in the process?
No, I think you bring up some solid good points. And I think what you're going to see, going into 2025 is you are going to see, a lot of lenders and servicers make a switch to, different, smarter payment strategies. I appreciate you jumping on, Jessica. It was great information. And, as always, we appreciate you being your company being a partner with LendSuite.
Thank you so much, Mike. It was great being here today with you.